All right, everyone, welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer, the views expressed by my co-host today are their personal views and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode. This episode is brought to you by Valora. Valora is the easiest way to send, swap, collect, and grow your crypto on the Celo blockchain. Download the app and start exploring dApps like Badali today at valoraapp.com/empire.
All right, everyone, welcome back to another Roundup edition of Bell Curve. You got Michael's 1 and 2, Vance, Yano. Ellis, welcome.
Good to be here. Yano. So I forgot to say, I think the biggest news of the week just dropped like about 30 minutes ago. The Warriors are getting Chris Paul.
Really?
Yeah. No, for Jordan Poole.
Wow. This is the part of the conversation where Mike taps out. I did say I'll pretend to know what that I did hear last week. I actually listened to you guys. Did hear that you guys were having a debate about Mike versus my athleticism, and I got better hand-eye than you. I'm just gonna say it. I got better hand-eye. I'll just say it's not even out. Ask Mike how closely you follow sports.
Not for you, Mike.
I got some photos of Yano playing wiffle ball at the charity tournament. All right, where don't make me air those things. Actually, that's a total bluff because neither one of us played. Neither one of us could play. Bunch of 2 sub-30-year-olds with blown out backs. Yeah. I hate to see it.
Couldn't even step to the wiffle ball playoffs.
Pretty sad. I actually saved 1 home run, but tumbled backwards and he's looking bad out there. I signed up for like 3 months of PT after catching that thing. Oh my God. Yeah, we were playing like these like blue collar, like 50-year-old guys who they look like I think we were the only one that didn't have like matching outfits for that thing.
Taking it too seriously anyway.
Taking it too seriously, yeah. All right, why don't we just launch right into the news of the week? I think the big headline is obviously the ETFs. So this actually happened at the tail end of last week, but BlackRock announced that they were filing for an ETF. BlackRock is the largest asset manager in the world. They've got $9 trillion in assets under management, and their record for getting ETFs approved is 575 approved to 1 not approved. So pretty good. Post BlackRock, there's just been a slew of other ETF issuers that have filed. So at Bitwise, Reignite their ETF application. Same with Invesco, same with WisdomTree. So pretty big week, and prices have responded. So Bitcoin's sort of leading the charge. It's been a very good week for Bitcoin and the rest of crypto. So what do you guys saying? I know it's been talked about a little bit, but what are your guys' takes on this?
I think initial take is just like sentiment flips on a dime. Like people can't even remember how they felt 2 or 3 weeks ago. And you have like CMS intern memes, you have fractals to 180, 200K for Bitcoin. You know, people are like expecting this to get approved next week. So it just shows like how fickle sentiment is. And to me, you know, bear markets are when price doesn't go up on, good news. And this is like very much price going up on good news. And it's kind of like a solution to a lot of the existential consideration of the asset class in terms of like, are we ever going to be let into like the kingdom of TradFi? And I think, November, December, January, it was like probably not / never. And now it looks like, there's EDX, the Citadel Exchange, there's the Soros Fund coming out and saying crypto has a place. Jerome Powell says crypto is not going anywhere. You have the spot ETF, which is like, looking like it gets considered. And it's not just Bitcoin. Like there's going to be a plurality of these things. Like if Bitcoin gets considered and approved, ETH is probably next after that. And so, yeah, it's good to see. And all of a sudden, like, you look at the chart, the previous all-time high of Bitcoin was like, I think 69,000 and we're at 30. Once you kind of get to like 50% of the drawdown erased, people start thinking, all-time high. That's just how it are.
Yeah, people start thinking we're close. I mean, you could see it in the social sentiment. There are these like different tools that track social sentiment. 6 million people tweeted Bitcoin ETF.
6 million people tweeted Bitcoin ETF last week.
And it's always like the cold start problem, because things like Bitcoin and ETH are more likely to be successful the higher the price is, which is the opposite of every other tech company. If Meta goes up 10x, it's more likely to go down than it up at that point. Like, something is going wrong. The business fundamentals don't justify that. But like things like digital gold or things that are reflexive like ETH, if you can get the cold start solved and you get people talking and the flywheel started, if Bitcoin goes over 40K, people are like thinking like next 6 to 9 months, like all-time high. That kind of feels like where we're going to go at some point.
So my 100% agree with all that. I think the additional take here is, like, let's think about this in the context of the timeline, where you've got over the last few weeks, over the last few months, just terrible sentiment from regulators as to wanting to blow this industry up, drive it into the ground. It's never going to be legal in the United States. Then you've got the largest partners of asset managers and largest asset managers in the space, Invesco, WisdomTree, and Blackrock, and Fidelity, Citadel, Charles Schwab, all coming out with positive sentiment, positive news, a desire to move in that direction. And I think that it kind of turns it around. Instead of, when we were talking about this last summer, we were all thinking, okay, when's going to be the Jay Powell put? I think now we're talking about the GG put. When you've got all this stuff happening in parallel, when you've got these massive asset managers coming through and saying, hey, we're actually going to step out and support this, you kind of assume that it has been de-risked from a regulatory perspective, from a reputational perspective, from a business perspective for these. And this is maybe, one read of why these BlackRocks of the world are putting out the ETF. There may be other reads. Maybe this is just a straw man, or maybe this is just a signal. I don't necessarily buy into that. I think those are a little bit more contrived perspectives. But if we think about this also in the timeline of what's happening in 2024, there is positive sentiment with what we know is coming in probably March of, the happening of Bitcoin, and the timeline for these ETFs potentially getting approved is 240 days, which is, I think, in February or March of 2024. Like, there is just sort of a new narrative. Obviously, all of that coincides with one of the most negative sentiment periods of time I've seen in crypto in the last 7 years. And there was a massive amount of short interest happening while that negative sentiment was happening. It was one of the most low volatility periods that we've seen. And I think a lot of the move up was definitely a short squeeze, but then it was also driven by positive narrative. What happens going forward? Who knows? But I do think we're going to see a lot more positive movements, and it's really going to come down to a regulatory fight. And, is it going to be the market structure bill or the draft bill, which is now, like, I think that was actually one of the biggest things that came out over the last couple of days. There will be a vote on that on July 19th out of committee. And that is a huge step forward. That'll be the first time that we have a regulatory bill that's pro-crypto, or at least supportive of crypto, going up for a vote. So it's all of these news stories coinciding in a backdrop of the most negative sentiment period of time from a regulatory perspective. So I think that's my quick and dirty. Yeah. Can we just remember that just last week we were talking about whether or not this was a worse cycle in terms of sentiment than 2019?
Right.
That was 1 week ago that was a legitimate question that was getting floated around Twitter. Now look where we all are.
Yeah. What do you think that BlackRock... So this comes on the back of two interesting things, right? The SEC is currently in a lawsuit with Grayscale over Grayscale's Bitcoin ETF. And also, the SEC is currently suing Coinbase. BlackRock is filing a spot Bitcoin ETF using Coinbase custody on the back end, right? So, like, what do you think that BlackRock knows here that the rest of us don't know? Is it just that they know? What do you think about that?
I think, like, there's two schools of thought. One is like, this is a line manager on the ETF product suite that just like threw this in and is like hoping to maybe get in front of other people, get in position if Grayscale wins, just like wants to be considered. The other school of thought is like, this is coming down from on high from Larry Fink, directly. And he's like gigabrain, 60 chess, trying to like do, all sorts of things within the Democratic political machine. He thinks that Coinbase is, something that he'll use long-term. Like I've seen all these conspiracy theories. It's probably somewhere in the middle.
I'm surprised none of the four of us showed up with the tinfoil hat on, right? Like, you got. I would have done it. I just didn't have. You don't like the take like this is the entire past year was a giant inside job coordinated by Wall Street parasites and government regulators so they could catch up to the old Bitcoin.
I feel like that's like just table stakes. I don't even feel like that's a conspiracy theory. It's also like kind of too obvious, maybe for me. Like double agent conspiracy theory, like conspiracy theory to the conspiracy theory. I don't know if there's really like any inside track here. I think it's more of a forcing function of like, this is going to happen eventually. And I think now what's going to weigh on market sentiment is like, I don't think maybe this gets approved in the next 45 days. That's what this guy, Eric Balchunas from Bloomberg seems to believe. Yeah. And he's like way more knowledgeable about ETFs than I am. I also think there's a high likelihood that Gary Gensler drags this out till February. Right.
Yeah.
Like between now and February, what are we all thinking? It's probably somewhere between the sentiment that we had before and the sentiment that we had now.
I think also just to address the conspiracy theory stuff, because many people are, right after the SEC enforcement action, all of these TradFi things. First of all, we'll talk about the exchange as well, but that NDX, what is the name of that exchange?
EDX.
EDX, that was announced a long time ago. So all of this stuff has been in the work. The way these institutions work isn't to, do a snap decision here and, hey, let's roll an exchange out because, Bitcoin is down. That's just, these things take a much longer period of time. The other thing is, look, I love a good conspiracy theory. I'll wear that Noah t-shirt thing. But I think the simplest Occam's razor explanation to this is just that we were morons for the last 2 years. I mean, it's much simpler explanation for me to think that the institutions saw that there was something here. They wanted to get their piece of it. They weren't going to decide to participate when we were being full stream morons. This feels like a good opportune time. I don't even think you have to be a conspiracy theorist to believe this. This is just good business strategy from their standpoint.
All these guys love a bargain,
Yeah.
Like I feel like so many of them been hurt just like by buying things that were zeitgeisty, and like AI is like fully priced. Like I don't know what we're gonna do with that, but like if you do anything now, you're probably gonna buy close to or at the actual top. Crypto is beaten down, but it's not going anywhere. Bitcoin, even at these prices, is like a $600 billion asset, $500 billion asset. Like people think like the Bitcoin has failed as an experiment, but it's like the biggest alternative store of value that exists. This is going to be something that's important. I think they recognize that. I don't know if there's any like imminent approval coming, but like I said, like if you have a few wins on the legal / litigation side, which Coinbase seems to have, you have a tactical narrative of like TradFi starting to get behind this. This is kind of like what happened in the last bear market, honestly. But like, sub out some of that for like Michael Saylor starting to buy Bitcoin and telling everyone it's legitimate.
Tesla,
all that stuff. And one of the things that I find super interesting about prior cycles is that if you ask somebody to remember or to recall to you what exactly happened and when it happened, they would have no idea what actually happened. It was just too much euphoria, too much craziness. Like they wouldn't be able to tell you the order in which the assets went up. But like Bitcoin, every cycle leads. Like I'm just looking at this chart, right? So this is the BTC dominance chart. Let me just throw out a couple numbers to just to illustrate this. So December 2020, crypto has Bitcoin has broken through its all-time high. It's at 34,000 by the end of December. ETH BTC is at 0.026. Didn't basically move. Bitcoin ripped first. And then you have, from March 2021 to about May, you have that ratio effectively quadruple. And so like, you kind of need to get the simping for Bitcoin out of the way early. And it's a very digestible asset. It's a very simple narrative. It's very easy, but it's kind of the gateway drug to all of these different things, all these different assets in crypto. And I think that's kind of what I'm framing this in my mind as, is like, okay, this is probably the start. If you see this big Bitcoin dominance move up, this is probably the start.
I would agree with that, Vance. And I think it's, you could even look at, Yeah, I think there's two ways that I think about Bitcoin dominance, which is there's sort of a secular trend, and then there's a more cyclical trend that could be kind of useful to you. The secular trend of Bitcoin dominance is down. Over a period. Let me zoom out a little bit more. If you go further back, right, and before 2017, It was about 95% dominance, and it's if this was a stock chart, right, it looks like it kind of bounces here, and now it's going to bounce again, but it's going to make lower highs. And I expect that to continue to be the case because a lot of the innovation and value that's getting created in crypto isn't just concentrated in Bitcoin anymore. I think that's a pretty healthy thing. But cyclically, I think Bitcoin dominance tends to bottom at the absolute peak, right, of market euphoria. This was January of 2018. And then it's kind of the first thing to catch a bid as well on the other side. So this might be the beginning of that process. So I basically would just agree with you. And then you can tell here Bitcoin dominance peaked in December of 2020, and then it was basically down only when everyone rotated into ETH and alts and those sorts of things.
Yeah, I think it's a really healthy indicator that shows that money and interest are flooding into the space because I don't think you're going to, I agree with what Van said. Like, I don't think you can have a bull run until this Bitcoin dominance starts to rise a little bit because at the end of the day, like Bitcoin's not really getting moved from retail buying right now. It's getting moved from institutional buying, I would assume. And I think this shows that like there's the first real spark of institutional interest back in crypto and, probably a year and a half here.
So one of the questions we were discussing earlier today is what does a spot ETF, let's say BlackRock ends up winning it, BlackRock gets to distribute it to all of its financial advisors who are selling it into the sales force of BlackRock. Like, what does that actually do to Bitcoin? The marginal buyer, there's some analysis that we've seen where it says if for every dollar that you put in, it has a 15 to 20x dollar multiplier in terms of the market cap. Like, do you think that there's enough net interest right now from ETF purchasers to really drive a new narrative?
Not from ETF purchasers. I think I'm just scarred by that specific narrative of like, the institutions are coming, they're like putting Bitcoin on their private platform and their private wealth management platform. They're all going to buy because now for the first time ever, they have the ability to buy directly from the JP Morgan private bank platform. I think that narrative, it's probably why I'm going to miss the next Web3 social alert, probably because I'm so scarred by that narrative.
I would push back on that. I view those as different things. There's sort of the corporate blockchain, not Bitcoin arguments, but I've always thought it'd be super bullish if you could just buy Bitcoin directly from your Fidelity brokerage, which you can now.
Well, you can do.
I just think once that like an ETF would, first of all, it would give a real seal of legitimacy. A lot of the conversations about is this going to be legal? Is it not going to be legal? So there's the actual flows sort of component in terms of how much demand is it going to drive, but then there's the credibility argument. I think they're both powerful.
Here's a maybe it's, I don't know what you guys think of this take, but I think that maybe the SEC thinks that they just can't win the grayscale case and they're going to roll over on Bitcoin while still trying to kill the rest of like protocols and like the long tail of crypto assets. So maybe they roll over on Bitcoin, but keep trying to attack,
give the industry a win.
Yeah, I mean, like,
make them look reasonable. I think maybe the SEC realizes that they went a little too far. And that seems to be the sentiment in DC is that Gensler extended his hand too much. So like maybe this is them pulling back a little bit, but I have no idea.
Unfortunately for them, I don't think crypto works that way, right? If you did this with stocks, if you said that, Tesla is the only legitimate EV automaker sanctioned by the government, all the other EVs would tank. All the EV companies would tank. If you do that with crypto, if you say that Bitcoin is legit, we're going to give it a spot ETF, what's everybody going to do? They're going to buy alts. Like that it's a global game. There's exchanges that are outside the reach of the US. Like that's just kind of how it works. So maybe they try that. I'm not sure how effective it would be.
I have another,
and therein lies the GG put.
Yeah. The other thought, this is where I really wish I had a tinfoil hat, but I find this argument from the maxis super frustrating because the tagline kind of is that everything else is a security except for Bitcoin. But at the same time, the maxis believe that the US is this like top-down sort of scam, about funneling money up to the top. So if you had to pick one crypto which was the most directly against the interests of the United States government, you'd have to pick Bitcoin, right? I mean, it's the other ones aren't necessarily explicitly trying to be money, and the other ones that the tagline isn't down with the US dollar. Right,
but the one thing that you could say though, like you're confusing securities regulations with like money and OCC regulations and CFTC and commodity regulations. Like those aren't all intertwined, like the government cabal coming together to say like that's the thing that we need to go kill. I think you can use individual perspectives as perspective on how to change things, regulate things, control things. But the SEC isn't really going to win an argument, and has already come out and said, I don't think Gary Gensler has actually said this yet, but other members of the SEC have said that Bitcoin is not a security. So like the cat's already out of the bag. But no, I don't think you can run that back.
I get that, but that's why I wanted my tinfoil hat on for this particular part, because I know that it's not like one big cabal and everyone's not on the phone being like, let's kill Bitcoin, but I do think countries in general respond to national interests, and if Bitcoin were to be successful as the explicit stated intention is, that's not within U.S. interests, and I think it's a convoluted argument to say that it is. So
I think the most interesting thing about the ETF is like, does it drive additional flows? And I think it will, but it won't in the way that people imagine it. I think the narrative of it being approved by BlackRock and brought into the regulatory fold is a narrative that drives flows. But like we've had BITO for 2 years at this point. This is not like a new phenomenon. You can go buy GBTC in your 401k retirement account if you want. Like there's a lot of ways to access this. And the other stuff is that Coinbase has been onboarding a lot of like the biggest hedge funds, biggest asset managers on the world. And like they are some of the primary users of this stuff. And like I get that there's an angle of like, if you want to short it, like you can't really do that on Coinbase if you're like really like a upsized asset manager. Also, like I've heard that these asset managers want to use it for leverage and do different things with it that are only kind of available within like the prototypical broker-dealer custodian model. So I think there's some, but we've already had this for a long time. So I don't think it's like turning on the floodgates.
To the counter argument there would be you can go buy GBTC or BITO. BITO has an expense ratio that's underperformed Bitcoin. GBTC is at like a 33% discount. And it requires you, both of those require you to be, or the GBTC requires you to be an accredited investor. I mean, the largest asset holders in the US as a population right now are the boomers, the baby boomers. And they're, have no access effectively if you're in a retirement account to be able, like 401ks, you can't unless you're on Fidelity. Fidelity Digital Assets allows you to buy Bitcoin and ETH right now. But if you have a 401k, you can't get access to Bitcoin, frankly. So there is an argument that there is a net new buyer. I agree, though, that I don't think that it's going to be as pronounced as the expectation of everybody with this potential application getting approved is expecting. I think that there will be net new, but it's going to be more of the benefit will be realized in the institutionalization of Bitcoin, less in the actual flows.
Alex Weiss also had a tweet where he marked all of the ETF approval and denial dates, and it's pretty clear. Like the market topped on the approval and the denials, and I think it's kind of interesting that the last cycle ended with the BITO ETF was approved. I think December 10th, 2021. This cycle will start with it. Just like a lot different.
Do you remember, Vance? You remember in, I think it was March of 2017, when the Winklevoss twins had their application denied, and that's what kicked off all of the excitement around ETH and, frankly, ICO summer. Like the denials and the approvals are major catalysts, up and down.
This episode is brought to you by Valora. Valora is the ultimate wallet for exploring the Celo ecosystem. Easily access over 50 different crypto assets and over 30 dApps for sending, swapping, and growing your crypto, all from your mobile phone. If you want to see real-world use cases for crypto, Valora's dApps page is the easiest way to access a growing list of the latest refi and DeFi applications. Discover new dApps like Badali. Badali is a digital marketplace connecting thousands of popular brands with shoppers all around the world as a safe and cost-effective way to purchase gift cards and mobile top-ups, all with crypto. Browse Badali on Valora's dApps page to access a variety of real-world goods and services while getting exclusive rewards. It's that simple on Badali. Download the app and start exploring today at valoraapp.com/empire.
Let me ask you guys about EDX markets. So EDX is this exchange that Citadel, Fidelity, Virtu, Charles Schwab, Sequoia, and interestingly enough, Paradigm are behind. So they announced it back in, I think it was September of 2022, but it just went live this past week. So that's why it was in the news again. The only 4 tokens that are trading on it are, I think it's Litecoin, Bitcoin Cash, Bitcoin, and ETH. Who's trading on this, do you think? And would any crypto native funds, like, would you guys ever trade on this, or there's no reason for you to trade on it?
Before we talk about this, I just want to say that if you knew that there was a Bitcoin ETF news coming, and you bought Bitcoin, you would still underperform Bitcoin Cash. So like that's the extent to which all this stuff is correlated, and especially alts that are like liquid and move a lot. You know, it's like it's not necessarily like a buy Bitcoin if Bitcoin ETF gets approved. But on the EDX stuff, like we've heard this is Citadel's basically, you know, main play for crypto. You know, they've stopped doing a lot of like the OTC stuff. But, you know, it's like run by a guy who was very prominent in the organization. It's clearly kind of like this, it's like a very kind of like overcomplicated version of what you could do with crypto, but like they've separated the custodian from the clearing, from the trading. Like it's great, but like it doesn't make a ton of sense within the context of crypto just being a more efficient version of all of that. I don't think we would ever trade there. I mean, we have ETH, we have Bitcoin, Litecoin, BCH. I don't know why we would do that, but I expect this to take a lot of share away from, you know, places like Coinbase, frankly, and Binance. Like all of the color that we have from the people that we trade with and work with are that they largely, if they're still in the US, move to the CME. And you can see that in the CME volumes, they've ramped over the first like 6 months. Like that really is becoming like a center of flow where it historically has not been. So yeah, I think the next cycle probably will kind of be like a regulatory cycle.
I have a question. I might be misunderstanding this, but I thought that EDX was going to partner with brokerages. You know, you wouldn't go and trade at EDX. It's an actual exchange.
Yeah, I may be wrong on that.
They funnel trades through to different brokerages, I think. I mean, similar to, you know, you're not going on the New York Stock Exchange and making
right.
Yeah,
right.
Exactly.
Well, it's also I believe I think I read this. It's API only. Like there's no interface. It's just an exchange to trade, and institutional only in that respect.
Yeah, I think they're launching a clearinghouse to settle trades, but not yet. But I think the key here is that, like, if you look at all the crypto exchanges today, there's this kind of like, they're a hodgepodge of like custody and settlement, and like they have the exchange and like they are the broker as well, kind of, but like that model that doesn't even really fully make sense if you apply it to crypto. This is like, we are going to take the traditional model of separating custody, settlement, and exchange, and then apply it to crypto trading, which doesn't really exist out there right now.
So what would you say the comp here is more like NASDAQ, New York Stock Exchange versus like the monoliths that you would have with Coinbase, Binance? Is that a fair assumption?
That is understanding. Yeah.
Okay.
Yeah.
Yep. That's what I thought too.
So like people joke about like the cabal in crypto or like the cartel. You know, there's like a room where everyone's fates are decided and where like the market direction is chosen. I don't think that exists, honestly, in crypto. I don't think it really exists in TradFi, but like
someone who is in the cabal would say the cabal.
That would be something that I would say. All the TradFi guys kind of travel in the same circles, we've noticed over time. And there's like, you know, like if you can just turn on crypto trading by going to the Citadel branded, run, licensed exchange versus like getting IC approval to get on the Coinbase and do all of that stuff, like it's just going to make it easier for them to come on board. And like, you know, I think that's what most of the TradFi people within crypto are talking about at this point. It's like, are you going to go trade on CME or are you going to wait for EDX to get up and running for real? because it's just like it's another API within the same regulatory framework and technology stack that this is the interesting part. It's the same technology stack that Citadel Securities works with. So, if you're already trading on the largest market maker in the world, you can trade on EDX. So I think that
just as an anecdotal piece of info, one of our investors back in the day when we were talking with them about DeFi and using things on chain and trying to get all this, they're very traditional registered investment advisor, and they were telling us it took them I think 6 months approval just to be able to stand up a separate air gap computer, doesn't have any of the software running on it. And that was their DeFi computer, and it had to stay in the office. They had to have monitoring on where the ledger was. The controls that maybe just unless you're in that position in that institution, the controls that are associated with RIAs and financial advisors and all the stuff that comes with that are so strong that nobody's willing to even like go there. If you have to be able to promote this idea, like step outside the bounds and try something new, I think it's underappreciated how hard that is.
Yep. It's just one thing that's sort of funny to me is that Litecoin and Bitcoin Cash are included there. That's just a funny selection of assets.
I mean, it's no coincidence that those are the same poor assets that Gary Gensler in that one speech said are not securities, except for Bitcoin Cash. Well, maybe he did say that one. I forget, but
I don't know, because even Jason and I've gone into Bloomberg a couple times, and if you just open up a Bloomberg terminal, look at the crypto products that they cover, it's like Bitcoin and ETH, and then it's like every ICO shitcoin from 2017. It's like Ripple, Stellar, Bitcoin Cash, Litecoin. They're all up there.
I think lost within this also is like the fact that ETH is in there. Like ETH is, it's been said it's not a security by the CFTC. It feels like it's in like the process of being blessed by the TradFi community. But like having it on these places is extremely bullish in my mind.
Yeah, I was gonna say that I don't think in this era of the SEC we're going to be able to see them bless it as not a security. It's going to have to live in this phase of purgatory, mostly because if they say that it's not a security, what that does is it gives credence to the Hidman documents, and it basically gives a playbook for anybody else who says, hey, we just followed the playbook of Ethereum. You've already said that Ethereum isn't a security because it becomes sufficiently decentralized. And if you run that playbook, you can make it such that you believe that you're sufficiently decentralized without, all of this is to get at, without new legislation, frankly, what's at least been discussed in the draft market structure bill, where you have definitions around all of this stuff, we're just going to continue to live in a world of purgatory.
Yeah. Well, I guess we'll have to see how the regulatory stuff plays out over the next couple of years. Well, I would love to maybe talk a little bit about Ethscriptions. I know you guys were excited on this.
Can we just, there's one other like institutional news thing that nobody really talked about this week, which was actually SAP, which like seemed boring, but I don't know if you guys read this blog post. So SAP powers a lot of like Fortune 1000s. They're kind of like the underlying infrastructure for how a lot of Fortune 500s and Fortune 1000s like collect payments and do their billing and accounting and all that stuff. They put out a blog post today. It's a couple days ago. It says, today, cross-border payments are a hassle for small and mid-sized enterprises with international business partners. Expensive, up to $50 a transaction. Slow, up to 7 days to transmit the money. And non-transparent. You never know the status of the transaction. These major challenges can get solved with digital money as a means of settlement, and blockchain is the underlying technology. And what they announced a couple of days ago is that SAP is now testing cross-border payments for all of their customers using USDC. And I think this is a narrative that is completely dead. Like the payments narrative is completely dead. But I actually had breakfast with someone yesterday they're working on the same thing, but for consumers. Like they're really good crypto founder, been building for several years. They are working entirely on this payments solution. And I think this could be a narrative that like stable coins in the real world economy, this could be a narrative that comes back that like nobody's talking about. And I think like reading that SAP blog post, you can really quickly imagine a world where like millions of businesses, I mean, it already happens in crypto. Like we accept USDC, where millions of businesses all around the world can settle like this intercompany trade instantaneously using USDC and other stablecoins. And so like, I'm getting a little echo by the way, but yeah, I don't know, I'm pretty excited actually. We're like this renewed interest in payments. I'm curious what you guys think.
Jay Powell yesterday in front of Congress said that we should consider stablecoins to be a form of money. And it was one of the comments that he made yesterday, which I thought was pretty profound. I think we're going to start to see cross-border, frankly, as we see efficiencies gained on, we've talked about this before, but native minting of USDC, I think provides a really strong use case for bringing USDC over onto a layer 2, onto an execution environment where it's just that much cheaper to transact. I saw sending a token or sending ETH on most of these L2s was getting close to that 1 cent cost basis. And you assume a couple more iterations and a couple more improvements, and you're sending in unlimited amounts of value for less than a cent over a layer 2. If you have that with native minting, you then have the security guarantees of USDC and the cost reduction that make payments viable. I think when you break down what payments really are, it really comes down to just their cost per execution. Person-to-person payments and is going to be probably the hardest. In-person payments, so point-of-sale transactions is sort of the next hardest. You're used to having to pay a fee in those types of situations, which is just assumed by the merchant. Cross-border payments, that fee goes up in some cases to be, percentages, if not like 10% of the total value. And so you just start to tick those things off and break down, okay, in the payments ecosystem, what's going to be the most viable right now? Cross-border. Then it comes down to, it's not really a cost structure there, it's about availability. So how do you get USDC or any of the local currencies to accept that as a form of cross-border payment? I think it'll be still a long ways before you get point-of-sale transactions to support USDC, mostly because people are just obsessed and kind of addicted to the points that they get from credit cards. But I think payments is always going to be a viable option. It really, frankly, just comes down to cost. And that's kind of what drives adoption in payments.
I'm not super bullish on it in the short to medium term. I just think there's this guy gave framework a little while ago that really resonated, which was just, if you have a product and you can make something like a service or product order of magnitude better, but you have to add one step, good luck, you're toast. And as opposed to if you have a product that's just as good, but you get to remove a step, then that's, a gigantic business right there. And I just think even like if you magically transported to a world where everyone is already on blockchain rails, no one would ever use the system that we have in TradFi. It sucks. But because we don't have that, what you're asking is tons of individual merchants and businesses to understand how to use this stuff and retrain and do new systems. So I just think it's...
So just to be clear though, Mike, everybody thinks of payments as being like Venmo transactions and using your Apple Pay or credit card at a point of sale. Like orders of magnitude more value are transferred cross-border every single day and in business-to-business transactions. I didn't see the SAP announcement, but like we're talking tens to hundreds of more value is in the payments realm in that area of the world. Where like cross-border FX and, reliability of actually receiving the money that you get. If you send a wire transfer and it has more than 2 stops, so 3 or 4 different FX conversions, there's like a 95% chance that your money actually shows up on the other end. So like if you want to send value to Nigeria, for instance, it's got to go through euros, it's got to go through, to the local currency and then to the bank account that you're trying to send it to. The reliability there is actually like still extremely small. So specifically what I'm referring to is cross-border and potentially with FX involved.
What's like an example of a cross-border payment for that? Because you still need to like, if you're going between currencies, you're still basically FX trading. You're going like euro to USDC to dollar. Because right, like no one in like the real world, I use USDC, but it's for crypto stuff. Usually like if you want to do crypto things and buy crypto stuff, then USDC is there's more utility as a dollar, but in the real world, you can't pay for anything at the store with USDC. So I think that's the point I'm trying to get at, is there's still that 3-hop conversion of currency to USDC to X. And then you need a different set of infrastructure to manage those transactions. So That's the friction that I see in the short to midterm.
Yeah, and the difference would be it's on a blockchain where you can check it versus like a correspondent bank where the money flows out and you're like, I hope this comes back on the other side.
That is true. It does suck. Like we had one small period of time where we had to, as Blockworks, make a bunch of international cross-border payments, and I can tell you it was horrendous. Absolutely horrendous.
It's literally the money flows out, and 5 days later, you hope it ends up in where it's supposed to go.
Yeah.
You think bridging your assets over to an L2 are bad? Try finding an international wire.
Waiting 20 minutes versus waiting 4 days. Yeah.
Yeah. Baby steps, though. Like, this is cool. Like, one of the reasons the SAP is cool is, like, I don't know, remember when everyone was talking about private ledgers? Like, SAP is using public Ethereum for global trade with USDC. Like, it probably takes 10 times longer than we realize, but I don't know. Baby steps. So
I'm there with you, Yano. I'm bullish.
let's go.
Same.
Let's go, baby.
All right. Should we talk Ethscriptions? Speaking of being bullish.
Tell me your analyst 10-year thesis on Ethscriptions.
Well, at first, let's do a description of it.
Here's my I'm sure you guys understand it better than I do. But basically, all right, so you have the EVM. The EVM processes user transactions and stores a bunch of data. There's like different types of data, right? There's persistent contract data, which is like the storage, right? There's temporary contract data, which is the memory, and then there's the transaction data, like transaction input data, and this is call data. If you look at both storage and call data can be permanent, but call data is just, again, my understanding is like it's a lot cheaper to use. And the reason for this is because smart contracts can't read the call data unless this is where my understanding breaks down, but unless it's the input to one of its own functions. And I think that's kind of the basis for Ethscriptions. So Ethscriptions are basically just chunks of call data that store images or texts. And so if you look at here, I can like sometimes it's helpful to see it. Like I'll pull up. I just found this one on Etherscan. If you can see this here. So like this is Etherscan. And you can scroll down and this input data doesn't look like anything, but if you change it to this UTF view, you can see there's just an image here. So this is an Ethscription. And voila. It's like ordinals, but with better branding. Because ordinals, I was gonna say,
It sounds like ordinals.
it is. I think it's basically ordinals. Like you hear the word ordinals though, and it doesn't really mean anything. I think the branding on Ethscriptions is really nice. It's an inscription on ETH. See it on Etherscan. There you go.
I like it. God bless these kids who are just using Ethereum for things it really was not intended to be used for, but are cool anyways. I don't know if this is like a 10-year thesis or like you need to go out. I think there's like Ether punks now, right?
Yeah, they sold out instantly. Ethereum punks,
Instant.
iconic.
I mean, is it a bit silly? Do we already have NFTs? Really need this? Yes, potentially no. But I think also it's like we're just continuing to bootstrap culture around ETH L1. Yeah, it's pretty.
I think I think here's the thesis for Ethscriptions is that there's a lot of stuff happening in the NFT world where like people are realizing that maybe I'm gonna botch all of this, but like if you look at Foundation or OpenSea or something like that, you realize that like a lot of NFT value and information is actually like stored more at the like on Zora. I don't have the details right, but like on OpenSea and not at the protocol level. But like Etherscan is kind of the source of truth for all of ETH, right? It's kind of like and it can be recreated just using this decentralized ETH data. So Ethscriptions are like maybe more of a hard data as opposed to something that's like stored at the app level. Does that make sense?
A hard date. I mean, also, what a beautiful business Etherscan is. Never raised outside funding. I think they're based in Malaysia or something. Probably like wildly profitable, but it's just been the source of truth for as long as I've been in crypto. Same with Michael. Like I was trying to read a Bitcoin block explorer to check out where the US government was sending the Bitcoin. I just was like, man, I cannot make heads or tails of this anymore. This makes no sense at all.
Yeah. Have you ever met them? Have you ever met who is it, Matthew, who runs it?
Never met him.
You could imagine a coin market cap like exit for them in the next cycle.
CoinGecko is they have a great story
I
as
was going
well.
to say,
Bobby.
Yeah, Bobby, shout out.
Yeah. What is the business model for the block explorers? How do they monetize?
Ads.
I think ads.
yeah.
So if you go to it and you click exchange, like right now you click exchange and it's sponsored by Sex.io or Play, you get like MetaWin or Coins.game, and this is all an automated business. So they don't have a sales team, at least is my understanding.
They make money doing the L2's block explorers too,
Right.
like B&B Scan and OP.
Oh, really? Oh,
yeah, and Arbiscan. And there's
I don't know how
I think there's like a 2-year wait list for like, getting them to do your blockchain too.
recurring that.
Yeah, that's not recurring. But
Well, hefty price tag. What I've heard is accurate.
yeah, very, very expensive. I think broadly it's like, when are we, like, or Ethscriptions aside, like, when are we going to get the NFT people reactivated? I feel like of all the crypto folks, they've just been destroyed. Eminem sold his Bored Ape today. It's June 22nd, 2023. Looking like there's like some outstanding loans on some Bored Apes, like right around the floor price right now on BendDAO.
Eminem down bad.
I know. You need to get these people reactivated. I don't know why that's going to be, but like, I remember it was like 2019, 2020, there was really no activity on NFTs. And then 2021, it was all of a sudden like punks are worth $500,000 each. Like, do we think that's going to happen again?
I was with a fund manager yesterday who has a lot of similar perspectives as we do, and one of the theses that he had was it might be the right time to start buying punks. We were also talking with another manager in the space, and they're one of their like pretty strong theses, and I think they've already been deploying into it is buying NFTs. Like there's an element here where it gets so low and potentially attractive that it might become a good just investment category.
What, buying NFTs again, you're saying?
Yeah.
Can you guys buy NFTs in the fund?
Yeah. We can. We haven't.
At what price would punks have to go to buy some punks?
It depends on how you have to underwrite it. And are you looking at it from like a individual asset class perspective? And is there some like value or utility from that specific NFT? Or are you looking at this basically as like a levered ETH play?
No value, no utility. Punks specifically. I said punks because there's no utility, like there's no game that's being created around punks. It's just a number go up and it's probably a levered ETH play.
I don't know if I don't know if we could talk about what price we'd buy.
Yeah, we can't talk about any of that, but I'm just looking at punks right now. It's 49 ETH.
49 ETH, yeah.
So the total market cap is 491,000 ETH. And ETH is at 2,000, call it. So times 10, 4.9 times 10, 49. Like this is like what? 2 billion market cap? Something like that? Let me do that math.
Like,
Remember when you and I said we were definitely going to buy punks when they went down?
Mike and I, top of the market, we're like, if we ever get into a deep bear market, we're definitely buying punks. Here we are.
All right, we're getting into another bear.
So punks has a $1 billion market cap aggregate. That's how I think about it. But there's no utility, right? There's no fees. There's no anything like that. So
that's why they're valuable.
I mean,
it looked like utility was trouncing the this is digital art for a little while, but I don't know. I kind of think it maybe isn't one size fits all.
The second you add utility, people start trying to make an equation out of it where you have the utility on one side. Is it greater than or less than the price?
I mean,
You got to be a pure revenue, pure play, pre-revenue, pure play.
the crazy part about punk is that like
number up chart. No Excel, no
revenue.
The crazy part about punks is that like Blur kind of like farmed the farmers in many ways, where someone on March 17th sold 800 punks into Blur bidding liquidity at once. Like, I don't know. When the market changes that dramatically in terms of volume and liquidity, I at least want to wait to like re-underwrite things.
Could you explain what you mean by farm the farmers?
Yeah, so all of these farmers were paid in Blur points to basically bid NFTs. Meanwhile, the people who were selling NFTs were actually like the biggest net beneficiaries. And like you have this like two-sided liquidity that has never happened before. And so like who are the winners? Probably the sellers of NFTs, but also like the protocol that like got this artificial bid liquidity. And the losers were like the people who bought. So like, Big Brother, Machi, folks like that, just kind of got torn up and lost a bunch of ETH in the process.
Have you guys ever heard the DGen Spartan line on Sushi Swap?
No.
So he this was an Uncommon Core episode he did a while ago with Hasu, but I did actually see he made the comparison between Blend and Sushi, which was basically one of the reasons why DeFi coins topped around the same time as Sushi Swap is the incentives were so strong on Sushi that they pulled so much liquidity to one place that if you held these kind of illiquid DeFi coins, your entire incentive there was to sell. And kind of a similar comparison can be made to Blur, whereas you might think something is super bullish because you're pulling a bunch of liquidity to one venue. But if you're a long-term bag holder of these things, there's an attractive price. You're incentivizing everyone to dump at the same time. So that mechanic.
Right. Your options to liquidate NFTs at scale are like you get this Sotheby's like sponsored Grail type sale, or you sell into Blur. I mean, maybe it is like a decent time to buy NFTs, but like calling them levered ETH feels very specious. That implies like it has both the fundamentals of ETH and then like this other thing. I don't know. Maybe we're just too right and left curves simultaneously to be part of this new generation of degens, but
Wouldn't that put us mid curve?
yeah, I mean,
I mean, right in the middle.
worked well so far.
Yeah, I mean, I completely agree. The only other argument is that depending on the tax situation, NFTs will probably take a more favorable regulatory perspective.
What do you guys think? I know we're running short on time here, but did you see that BNB is using the OP stack to launch a layer 2? It seems like Zora was another NFT marketplace that announced that they were launching using OP stack. It feels like there's some traction. That's at least just my sort of just looking at it perception, and more protocols are using that. Is that your perception as well? I got to be honest, I haven't really looked into the Binance, like the BNB using OP stack, but it seems like there's some critical mass that's gaining there.
Doesn't make sense to me to build an L2 on a centralized L1 with a permission validator set. You can literally have any scalability you want. Just like L2s are just probably a new opportunity to launch a token, frankly. And as we've talked about, the lowest effort thing that has the highest market cap return will get launched a lot until there's so many of them that they're all worth nothing. Enter all of the Uniswap clones from 2021.
Very well said.
RIP. Aside from like, the L2s on Binance and all that stuff or BNB, the thing I would like to see in this bear market, I would like to see CZ and Brian, kind of bury the hatchet, come together. Like you're literally the two last men standing. I feel like there's been a lot of beef between those two, obviously very different regulatory approaches and probably viewpoints of the world as well. But like, we're going to have this like TradFi carving up of like Coinbase's business. I feel like a little bit like it would be good to see them get on the same page, more so than they have been historically.
Good luck with that. Me too. I'd like to do that.
We got to bring the tribes together. Even even Bitcoin. Like we don't hold a lot of Bitcoin, but like respect the pump, as Ivan on Tech once said. You gotta pump. You gotta be there for the other folks. There's not many of us left.
As Ivan on Tech once said.
I used to watch those streams. It was so bizarre watching him turn into like a tech explainer to like a guy who pumps coins. But like that line that he said is just a classic, and it's true.
One day we'll tell you about our influencer business that we created in the bottom of the bear market, but leave that for another time.
We don't.
I would love to just never talk about that again.
We should have the YouTube streamers.
It's a big growth business.
Yeah, that was chaos. Anything else this week, guys?
What?
No submarines for anybody soon, please.
Yeah.
Vance, you need to feel bad for those people. People were like mocking the people in the submarine. That made no sense to me. Like
Totally.
Terrible way to go.
For people that are trapped at the bottom of the ocean. Like, you know.
Well, it sounds like it wasn't really trapped. It happened very fast, but crazy story nonetheless.
No submarines for anybody.
All right. It's a good way to end it. See you guys next week.